Happy holidays, everyone. This is Scott Welsh. It's December 30th, 2015, and this is this week's blog post. To finish out the year, I wanted to talk this week about trend following and a little twist that I'm putting on trend following that I think is kind of exciting, and maybe you'll like it too. But I want to do a quick review. This is one of my tabs, one of my trend following tabs. Trend following is going to be a big project for me moving into next year, 2016. And this is the beginning of the project. I actually have 3 different tabs with 3 different sets of robots and so forth. So that's just a little insight, what I look at on a daily basis. But I wanted to specifically talk about the euro dollar. Why the euro dollar? Just because it's the most common. Everybody likes talking about it. So that's what you can see. I have more than the euro dollar here. But let's talk about the euro dollar. All right. Now, quick review. We've talked about it in past posts, written and video. But the reason trend following is so important and worth your consideration is that some of the best traders in the entire world trend follow. People who have made millions and millions and bought baseball teams, Major League Baseball teams, and become millionaires and even billionaires, trend follow. If you look up all the stats on the best hedge funds / CTAs in the world, they're trend followers. That's not the only way to trade, obviously, but trend following is hugely universal, the best traders in the world. Plus, we've talked about it, it's timeless. Trend following makes sense, and people have uncovered data back 500 years on trend followers. Even before there were actual markets, like we see on the screen, trend following works. So I wanted to review this particular trend following robot, show it, and then show the little twist that I'm putting on trend following, as I mentioned. All right, let's talk about the euro dollar, excuse me. Clear my throat, I'm so excited. All right. This is the trend following robot. Now, trend following works best on long terms. Why? Because trends in the short term, they're pretty up and down. They're pretty all over the place. There aren't really any quote-unquote trends, major trends that you can take advantage of on the small time frame charts. Again, I'm working on that, but I haven't found any sort of major trend following abilities in 15-minute time frames, for example, or less. So I've moved all my trend following research out to 240 minutes and beyond. And I'm only doing currency pairs right now. Why? Because I love Forex. And number 2 is there aren't a lot of people in the world trading just Forex. They trade stocks, a ton trade futures. A ton of trend followers do futures. But I want to be a little bit different because I like to go where other people don't go. So I'm going to focus my trend following initially just on Forex. All right, so this is the euro dollar 240-minute chart. Now, what trend following believes in, and it's universal, timeless, and it will work now and it will work forever, is that when something develops, i.e. a trend, it will break out. It'll be going sideways for a while, and then all of a sudden something will change and price will shoot up and break out. This is a universal phenomenon. It will be this way forever. It happens in trend following, on charts, and it happens in life. People decide, they don't know what they want to do, and then boom, everybody's doing something, right? So it's very universal. How many times am I going to say that till you believe it? I'm going to keep saying it. It's universal. All right, let's take a look at a trade. Trend following, and this is pure trend following, okay? This robot is pure. This follows the rules that have been set down by trend followers for decades and decades, and that is, you get in on a breakout, and you ride that trend for all it's worth, all the way up, and you do not get out. And this is crucial to trend followers. They swear by it. I've heard interview after interview and read book after book and article after article about you cannot cut your wins off. You hear me? You can't. Now, what is the consequence of not cutting off your win? Well, here's an example right here. From August 2015, price breaks out. And it rises. Look at this. It goes 600 pips in your direction. So what would you do? Would you get out? Well, I don't know if you would or you wouldn't, but trend followers say no, you don't get out. When do you get out? Only when the trend is over. How do you know when it's over? When it crosses below a low from a bunch of previous bars. In other words, they use trailing stops. So here's what happens in a typical trend following trade. Price goes 600 pips and then immediately turns around, but you don't get out. You don't get out until it crosses this little blue line, which is its trailing stop. You can see on the screen. And then you get out. You get out for actually no gain on a 600 pip move, roughly 600 pips. Let's see exactly what it is. 12.15 to the high of 17.12. So 12.15, that's about 500 pips. So there you go, 500 pips and you get nothing. But also critical to trend following is short stop outs. Let your winners run and stop out quick. That's basic trend following, right? So guess what? Here we go. Price breaks out, it's moving down, it finally breaks out of a level that we are interested in. It goes a little bit in our direction and then immediately moves away and we stop out quick. Okay? So that was a pretty short trade. Let's take a look at a few more trade examples of pure trend following. Here's one, right? Breaks out a level and then immediately turns around and we're stopped out. Haha, but it breaks out again and we're in. Trend following doesn't care how many times you lose. It doesn't even care about losing. It only cares about the long trend. And speak of the devil, look at this. Breaks out, goes our way, comes back to break even. You don't move to break even. You don't do anything if you're a trend following, pure and simple. And then it goes in our direction and comes back. That would be fun to deal with this, right? Emotionally, that would be very difficult. That would be very difficult. But not for a trend follower. Trend follower doesn't give a rip that it comes back. And then it goes in our direction and consolidates. Goes in our direction, consolidates. This is kind of weird. Look at that typical pattern, right? Something's been going on in the currency markets this year. Interest rates? Anyway. Down again and back. Down again and back. Down again and back and down again. And finally, as you can see, it hits our trailing stop for a massive win. That is trend following distilled. If you are a trend follower and you believe in it, that is exactly what the doctor ordered, right? And let's move on. And nothing is broken out, so there are no other trades, okay? So that's what trend followers do. That's what they believe in, and that is typical for trend follower, a short stop out and a humongous win. Let's take a look. How big was that win? 1071, and then it got out at 10, so about not quite 400 pips. That's a monster. That's an excellent win. So to get this, you have to suffer the last one where you went 500 and then it came back for nothing. This is the life of a trend follower. Now let's take a look at this robot and take a look at the strategy performance report. Again, as always, this is based on a hypothetical $10,000 account. I did not trade this live, so these are just results that I have optimized and tested and walked forward. 2015 was not optimized at all, so that is a blind walk forward, as if I were to trade it live in the market, okay? That's what blind walk forward means. You didn't touch the data, you just let it go as if you were trading. I like to watch robots for a long time before I put money into them, by the way. So I like to just watch them, and that's what I've been doing with this robot for several months now. But anyway, let's take a look at the numbers. $17,000 of profit, pretty good. It's good long or short. Trend following does not discriminate. Here is something very typical about trend following, though, and I want to make this into your skull, make this ground into your skull. 27% win rate. Trend followers don't win very much. This is extraordinarily typical. They win 25 to 40% of the time, depending on what your trend following parameters are. This is super typical, and by the way, long is better than short. Short trades don't work that great, even though we just saw a great one. So overall, 27% win rate. Average winning trade is 700 bucks. That's nice. Average losing trade is only 148. So it's our winners are way bigger than our losers. Again, that is, trend following in a nutshell. The largest losing trade was only 168 bucks. The average losing trade was only 148. By the way, it's typical for trend followers to bet between 1 and 2% every trade. This is exactly that. It's about 1.5% risk per trade. It's nothing. It's just a little over 1% per trade. So that's how you can survive all this losing, because there is a ton of losing in trend following. You have to get your mind around it and get used to it. That's just part of life. The maximum winners that you've gotten is 3. The maximum losers is 15. So there's a lot of losing, okay? And the maximum drawdown is almost $5,000. So on a $10,000 account, you'd have to be prepared at some point to maybe lose $4,900. That's a little bit rough, but guess what? When you get in a huge losing streak, 15 in a row, the largest losing trade was 168. You get a 168, you get a bunch of 148s, and they all piled up, and your losses can get big. Plus, obviously you're open to gaps. If you're in a trade for a long time, it might gap the wrong way too. So there's a lot going on in trend following. Low win percentage, big wins, small losses. But as you can see, it does make money. And I like to look at it on a yearly basis, even though trend followers don't care that much. But let's take a look. 2015 was a massively great year. Think about that. On a $10,000 account, it made $4,600. That one robot, one currency pair would have made 50% of your account. Of course, trend following is feast and famine, right? It made a ton here, just made a little bit in 2014, and didn't make anything in 2013. 2013 was lousy for trend following on the euro dollar. 2012 was okay. 2011, very mediocre. And then it didn't lose any of the other years. So you can see there's been some volatility in the last 5-6 years, but the volatility has been great in 2015 most recently, which is kind of cool. Just want to show you this too. You need to get used to losing in trend following, right? Let's take a look at the monthly results. Look at what happens when you're a trend follower if you trade, especially if you just traded one currency pair. Look at this losing streak. Check this out. 1, 2, 3, 4, 5, 6, 7 months in a row. No winning, right? And a trend follower would say, yeah, that's part of it, right? It's exactly right. Why didn't it win? No trends. It kept breaking out and coming back, breaking out and coming back. No trends in 2014, at least at the beginning, so you don't win, okay? Trend follower. Oh, another one, 2013. 1, 2, 3, 4, 5, 6, 7 in a row in 2013. So that's not atypical. And look at this, 1, 2, 3 here and 4 there, even in a winning year. 2012 was a winning year. And you had 1, 2, 3, 4, 5, 6, 7, 8 losing months in 2012, and you still made money. 8 losing months, and you still made money. So trend following is fascinating, and this is very, very typical. As a trend follower, if I were to create a portfolio of trend following, I would love this, actually. This is not the only robot that I would trade. One of the other official tenets, the official rules of trend following is diversify. You're not going to trade just one robot on trend following. You're not. You're going to trade 8, 10, 20. Some trade up to 100. But in a diversified portfolio, this would be an absolutely critical member that you'd have to have. So it's a very, very good example. Now, let's take a look at what I've done to trend following. And this is absolutely not what you should do, at least according to the superstars of trend following. As you can see, there's a whole bunch of robots I'm testing on this particular strategy. But let's go apples to apples, euro dollar to euro dollar. Now, I have a real problem personally, just me, with a low win percentage. But I have even more problem. My biggest problem is being in trades a long time. I just can't stand being in trades a long time. It really bothers me. I want my trade idea to show itself and be done with. That's just my personality. It's not the only way. It may not even be the best way to trade. It's just the way that I am. And if you're going to be a trader, you have to know who you are. So what I've done is I took that same trend following rules, you break out, but instead of a trailing stop, I put a time limit on it. Why? Because I hate long trades. So this particular robot breaks out with all the same rules of trend following, but it has to be over within a week. That's what I've built in. If it's not within trading week, if it's not over in a week, well, it is over in a week. If it hasn't done what it needs to do in a week, then it's out of there, and I'll take the loss. Again, very short stop outs and a very short time window. Get it done or get out. You hear me, euro dollar? And I did it on a daily chart, too. I went up even because daily and 240 are my two favorites. So let's take a look at what this typical robot does. I have a very short stop on it. On a daily chart especially, it's short. But once again, I'm only risking 1.5%. Every trade, I only risk no more than 1.5% on each trade. So take a look. This one breaks out and then it immediately stops out. Look at that tiny little bar. Can you see that? It's just a tiny little stop out. There's another little stop out here. And then we go through a nice little winning streak. And this is 2014 right here. Win, win, win. Now, notice something here. That trades are over usually within a week, right? I want them over with. And a bunch of losses right here and then another winner. So I'm taking short wins and I'm taking my trade idea and I am taking the profit early. You see that? I'm not letting it play itself out. I'm not letting that 400 pips or 500 pips come back to break even or worse. My personality can't deal with that. I am not happy about that. I want it over with. So again, bunch of losses. And let's take a look at this real quick. There's a win there. I'll even spread out the chart. I hope it's not too much writing on you. BO means not body odor, but breakout, because it's a trend following system. That's gross. Anyway, you can see winner here, bunch of short losses. Now, you might be looking at this trade, and this is 2015 now, March time period. you can see that this is over a week, right? It's way more than 5 trading days or 7 trading days. I have built into this robot a secret sauce, a secret ingredient that I will stay in a trade longer than a week for one reason and one reason only, if it's going my way. So I built in a little indicator, and my programmer helped me with this. Thank you, programmer. But if it's going my way, I stay in. And then once the trend is not in my favor anymore, it gets out. So I am out within a week unless it's going my way. And then I'll stay in, because anyone can stay in if you're winning, right? So that is a crucial element that I have added into my trend following, at least in this particular trend following paradigm, if you will. I want to get out, take my profit, unless it's going my way. So that is a little advantage of this particular robot also. And then we get to, another short loser. We had a winner, a bunch of losers, whatever. Let's take a look at, and I called it the 1 bar breakout, but it's not 1 bar. The first thing I tested was just 1 bar, by the way, and I can share that with you too. But I need that off my chart because it's not a 1 bar. It's a week. It's a week bar. I'm going to call it the week bar. Anyway, let's move into the statistics. Go ahead and load that for me, TradeStation. That would be great. Remember, our profit on the other one was about $17,000 over the same time period, 2003 to 2015. Same hypothetical $10,000 account. We made 19, almost 20. So it makes more. Whoa, trend followers. By getting out in a week or so, I make more money, at least on a euro-dollar currency pair. Isn't that interesting? You can see that long and short trades are almost identical. How cool is that? To me, I just absolutely love that. I don't know if you love that. But I love that because it shows that the trading strategy makes sense, right? It should break out both directions on a currency, and he should make approximately the same amount of money. I like that. It doesn't work better in one direction or the other. And I'm not saying the one, never mind. One direction. Anyway. But the winning percentage is still pretty low. It is higher, obviously, right? We went from 27 to 31, right? But it's still low. So you're going to have to deal with that. But by taking short losses, for me, that makes it easier. You can see that the average losing trade is just over 1.5%, 160 bucks. The largest losing trade is 257. How does that happen? Almost always it's a gap. If it gaps from a Friday to a Sunday, it goes through your stop loss a little bit. But 257 bucks on a $10,000 account, that's nothing, right? That's not a big deal at all. You can see that winning percentage on long and short are pretty good, about the same. Only 177 trades, but guess what? You don't trade a bunch in trend following, right? In my day trading robots, I like thousands of trades, over 1,000. You're not going to get that in trend following. That's the way it is. Maximum winners are 6, and our maximum losers drop down to 7. More winning, even though the percentage is not that great, there's more winning and less losing, at least consecutively. And look at the drawdown, way less. Only a $2,300 max drawdown. And again, this is the worst it's ever done. Right? The worst it's ever done. You may never see a drawdown that bad again, or of course you may see something that's worse than that. But the worst it's done since 2003 is 2,300 bucks, and that's very manageable for me, at least anyway. So isn't that interesting? You can be a trend follower, and yet you can still write your own rules. You can still have a personality that doesn't like to be in trades for months and months and months at a time, or weeks at a time. You can cut off your trades while they're in profit, or at least cut them off when you feel like, well, the trade idea is over. So that's what I'm working on this year. Guess what? Of the two, the pure trend following and the trend following with a week cutoff, guess which one I like? Of course, I like the shorter one. But in this new year, it's time to figure out who you are and what you like. If you like trend following, if you believe in it, all this stuff needs to be figured out, and it needs to be figured out by New Year's. You hear me? You got to figure this out by January 1st. Last thing on this video, let's take a look at the yearly returns. Look at that. Even though it's trend following in nature, there were no losing years since 2005. And again, I don't have data to 2003 because it needs that data from 2003 and 2004 to start calculating trades. So that's as far back as it goes. But from 2005 to 2015, no losing years. It didn't do as well, right, in 2015, but it still would have been a really nice year. So I really, really, really am interested in pursuing this further. As you saw my screen, it's 5 or 6 or 10 or 12 of these I'm going to start testing. I'll have more data. I'll share more. If you're interested, obviously, in these robots, you can always email me. I'm happy to talk about it and share more data and whatever. But trend following is going to be a big part of my research in 2016. and I will keep you posted. Have a great new year. Be safe. Make good decisions. And I'll be back next week with another video and another post. Talk to you soon.